Hello. It's hot in this thing. Are we on the moon yet? Have we hit $1 million? $1 million yet. I'm ready. I'm ready to go to the moon. I'm strapped in. Balaji. What is that dude's name? Balaji? Ballsack? What's his name? I don't know. God, that thing is hot. All right, let me get ready and we'll do this proper now. I do think we're going to the moon. I just don't think we're going to see $1 million freaking dollars in 90 freaking days. But I love the hopium train and I love your enthusiasm. Welcome to it, Beyond the Block, around the world and around the web, here on live stream Sunday on the Bitcoin Live Network. Did you see 3D Perspective? You should follow our friends here on the Bitcoin Live family of shows. 3D changes perspective. And of course, earlier this morning, my good friends over there, Style Pigeon and Purple Suede, Gingerly. Really good stuff. And man, I would encourage you to watch them, follow them. Really, really hardcore into talking some really great Bitcoin stuff today. And of course, Roundly X is an awesome way for you to stack sats safely and smart. Get the link. I think can you put the link up, Nick, for Roundly X? Because they do a great job. And I would love for folks to be able to take advantage of that. Again, Roundly X powering the Gingerly show here on the Bitcoin Live network of shows. With that being said, we're on live stream Sunday around the world and around the web. Thank you for being here. Big show today. Let's I guess we should roll the official show open. Should we roll the show open, Nick? All right, I guess let's make it official and launch the show with our big fancy produced graphics that we got. I think very, very impressive, isn't it? It's kind of cool. There it is. There's purchase. There it is. That's the link. Yeah. Producer Nick, executive producer Nick Diamond Jr. making it happen in the background. And if you don't follow Nick Bitcoin Live, please do give everybody on the team a like and a follow as well. Working hard behind the scenes, Nick Diamond Jr. All right. Let's get into some of the news. Obviously, we've been talking about the $1 million price prediction in 90 days. Again, I love the enthusiasm. I love the hopium, but really, I don't think we are going to get there. The lovely and talented Samson Mao. I love the guy. If you don't follow Samson Mao, Blockstream, Jan 3, you know, he's out there. And he really put together a great tweet, kind of like dissecting what it would really look like if Bitcoin does hit and what it would take for Bitcoin to hit $1 million in 90 days. And Sam's tweet, if you're not following him on the Bird app, I would encourage you to do so. Sam's tweet says, for 1 million Bitcoin market cap, we're looking at about a $19.3 trillion. Oh, yeah, there you go. Put up the tweet. Thanks, Nick. Yeah. $19.3 trillion would be the second biggest economy in the world, behind the U.S. at $22.9 trillion. And China, again, China. Did I say it right? China. $18.3 trillion. So just cool your jets. Somebody needs to eat a Snickers because you're not yourself when you're shit posting $1 million. Now, folks are, you know, if you've been following the thread at all over the weekend, everybody who's anybody on the crypto Twitter Bird app is like weighing in on this, from Peter McCormick to, you know, just everybody that I've been watching here. Even I think Anthony Pompliano is getting in on it. But if Bitcoin really does hit like $1 million in 90 days, that's going to be really, really bad for lots of folks as well. Nick and I were talking about this offline, that it is a global financial crisis, the likes of which we would never have seen in our lifetime. And that would mean really, really bad things for lots and lots of people. And so I'm kind of torn, like if it really did do this, what that would mean for the rest of the world and the economy and folks and family and friends who aren't perhaps prepared. So I'm kind of torn between like, yeah, we've been preparing for this and we all kind of know this tsunami is coming and that's why we've been stacking sats. But then if it's going to be as bad as what some people are really saying, oh, dear Lord. All right. Also this morning on the Bird app, before we get into the weekly rewind, this one here, there wasn't an announcement about the announcement. So I don't know if this announcement is really true or not, but apparently, maybe we can get the tweet up. Executive producer Nick Diamond, Justin Sun. Y'all know Justin Sun. the Honorable Justin Sun. You have to call him honorable now because he's like some sort of official honorable person that has a title. But Justin Sun proposing a bid to buy Credit Suisse. Yeah, I'm not making it up, man. It's on the Bird app. He's out there. He's tweeting it. I don't think so. And the last thing, as long as we're talking about Credit Suisse, I kind of put this out the other day, and I don't know, people who think they have more degrees than Fahrenheit like to troll me and flip me shit, and they're like, oh, credit default swaps. No, you can't. And I was like joking, like saying, hey, who's got the credit default swaps on Credit Suisse? You got any more of those? And then already Dr. Jeff, if you follow Dr. Jeff on the Bird app, again, with Dallas Your Cap, love that guy and what he does. Again, the amount of credit default swaps on Credit Suisse is just like skyrocketed. Again, DYOR, not financial advice, but again, credit default swaps. And we will get into what credit default swaps are if you're new to this and you're like, what is a credit default swap? And the history of how they came about later on here today, Beyond the Block, as we go in covering Rugged, the financial collapse of the global economic system by central bankers. All that being said, I think we've kind of covered the hot stuff today on a Sunday morning, Sunday afternoon, whatever it is, wherever you are, here around the world and around the web as we continue Beyond the Block on the Bitcoin Live family of shows. All right, let's do the weekly rewind. I think it's time. Yes. All right. The weekly rewind, three of the biggest stories that have been trending around the world and around the web online here. Story number one, I don't think it's that big of news, but everybody's kind of been talking about it, so we kind of got to touch on it. U.S. regional banks are struggling mightily, and a new report that just came out shows that, what is that? About 186 banks, regional banks, are at risk of default. And that's pretty scary. Also, Bitcoin market crap. Maybe a little Freudian slip there. Bitcoin market cap has grown by, get this, $194 billion in 2023 alone. And Wall Street banks just in Q1 2023 have lost, get this, $100 billion. So again, the Bitcoin market cap continuing to swell and rise as banks continue to lose money. Story number two in the weekly rewind, and maybe you've seen the screenshots already. I think Albacore is his name. Albacore on the Twitter had already released some of the screenshots of Microsoft reportedly testing their Edge browser Web3 wallet integration. Now, this is kind of crazy. Cointelegraph, I think, had the story out as well, so you can check them for facts, not FUD. But the supposed screenshots show a non-custodial crypto and NFT-friendly Microsoft Web3 wallet embedded in Edge. Well, this is kind of cool to a point. I don't know if you follow Corey Klippstein over there. Swan Bitcoin, Corey. I think last night Corey was saying, and some of the folks were saying, that this is only going to be for Ethereum only. There's no Bitcoin, so you can't even custody Bitcoin in this wallet. So I'm not sure about that. I like to see adoption. I love to see progress, and that's really good. But again, ETH only and NFTs, Microsoft, Bill Gates. One of my friends on the Bird app, D-Rex, it's just another way for Bill Gates to kill us. But again, Microsoft making some moves. And let's move on to story number three in the weekly rewind. Silicon Valley Bank, that's right, we talked about this here a little bit, but Silicon Valley Bank could trigger a bank run. 186 banks well positioned for collapse. This is what we were talking about here. The rising interest rates, which have brought down U.S. banking sectors by a value of about $2 trillion, apparently. That's crazy, $2 trillion. So just some of the big stuff going on in the past week. I'm being told by Nick we have a commercial. We're running commercials. I love this. Apparently, a new commercial for Bitcoin that was done recently. So let's check out the new Bitcoin commercial. I didn't know we were running commercials, but
okay, you're not going to get COVID if you have these vaccinations.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the
the banking system is safe. Your deposits will be there when you need them.
If that isn't the strongest case for Bitcoin, right? Oh my gosh. Oh my gosh. Let's go, Brandon. Let's stack some sats. Okay. I guess this is where we move on to the main feature of the show, right? All right, let's get into it. The banking collapse, everything that's going on, how bad will it be? No, we don't know. A lot of folks are saying it could be very bad. But all of this really started, wasn't last week. It wasn't even like folks want to blame Trump and the deregulation that Trump was doing in his tenure in office. But I think really, if you analyze the situation and do a little research and rewind, it goes farther back than the Trump administration. It goes farther back than Obama, than Bush. It goes all the way back to the 1980s. And we will spotlight this year today what we call rugged, the collapse of the global financial system by central bankers. I think we have a fancy graphic thing. We love doing the graphics here. So let's run the, do we have the rugged open? The little video thing that does. Yeah, that's pretty cool. I got rugged. I love Nick. Give Nick again a round of applause. Nick with the graphics and the producing back there. Nick Diamond Jr. in the Bitcoin Live family of shows. All right. When you think of history and economics, I, for one, think most people are the two topics that most folks would be like, I'm not interested in. I have no idea about history and economics growing up. It wasn't like something that you really got into or you wanted to study on your own. We had more important things, really, I think, to worry about as kids growing up. You know, we weren't concerned with charts and numbers and graphs and Fibonacci levels and all this kind of crazy stuff, right? We trusted the government. We trusted the media and whatever they were telling us. We thought that was fine. That was good. But I think history has shown us we can't really trust the media and we can't trust these officials who say something that turns out to be completely inaccurate. We have a clip of from Ben Bernanke and Maria Bartiromo. Again, can you pull up the clip, Nick, of from Twitter of these guys from like 2005, them talking about the potential of an economic collapse in the housing market. And again, I think this just goes to underscore that these people really don't know what they're talking about. The clip there, yeah.
Economists coming on our air and saying, oh, this is a bubble and it's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices at a nationwide basis.
Yeah. So we're going to trust these guys who are the experts, okay? Let's just continue on. So let's set the stage, okay? So after the Great Depression, the United States had about 40 years of economic growth with zero, that's right, zero crisis, right? And in the 80s, we started to see bigger and bigger financial crises. Each one was bigger, and the financial service industry just made more money along the way. How is that possible? That's a good question. It was all at the start of the Reagan administration. And what they did was they set off what would be a 30-plus year era of deregulation. So it wasn't Trump, it wasn't Obama, it wasn't Bush 1 or 2. It really goes back to the Reagan administration, a 30-year plus era of deregulation. In 1982, the deregulation of savings and loans started. Were you even born in 1982? Probably most of you weren't born in 82. So you're like, I don't even know what the hell happened in 82. What was going on? But what happened was deregulations of the savings and loan in the Reagan era, allowing them to take on more and more speculative positions with customers' money. Sound familiar? Okay, and by the end of the decade, we know history shows us how this played out. $124 billion later in taxpayer money. Yeah. So it started again in 1982, the deregulation of savings and loan, and history shows us this led to a huge scandal. Let me introduce you to this guy right here. His name is Charles Keating. Put up the picture of Charles Keating. Yeah, that dude. Why are we talking about this guy? He passed away in 2004, right? He was guilty AF in the savings and loan scandal. But guess what? After he was found guilty, guess who he hired to write some really, really nice stuff in his defense? Alan Greenspan, before he was even Fed chair. Alan Greenspan. Yeah, that guy. Former chair Alan Greenspan, his run at the Fed, well documented, starting with his appointment under Reagan, then Bush Sr., then Clinton, and Bush Jr. And what that led to was more deregulation. See, under the Clinton era with Greenspan, deregulation went crazy. It was like, woo, let's deregulate everything, right? And Clinton appointed two individuals to the office of Secretary of Treasury. Robert Rubin from 95 to 99, and then the lovely and oh so uber talented Larry H. Summers, Lair Bear, deputy director there until he became the head honcho in 1999 to 2000. And that's just a little history there. So after the Great Depression, what was needed big time was regulation. And one way I think to really kind of give the example of regulation is to think of an oil tanker. Yeah, there's Larry Summers. There's the Lair Bear. Yeah. And a little known fact, Larry also on the board there at the Digital Currency Group. The Digital Currency Group, you know, Barry and who they own, which is Grayscale, and a lot of other things that are crypto related. So this guy is tied to Barry and the folks over there. DCG. Anyways, let's get back to regulation. What does regulation look like? Okay, I think the best way to use the analogy, is there you go. Thank you, Nick. The oil tanker analogy. Regulation worked much like the individual containers on an oil tanker. They kept the ship stable and safe, okay? And what deregulation did and what it does is it, in essence, takes down the barriers within that oil tanker to allow for sloshing, right? And that's what makes the ship less safe and more prone to capsize. So when you think about deregulation, think about the example of an oil tanker and these barriers being broken down and regulation being all those different barriers. Okay, so let's move on. A very important woman that a lot of people don't know about. Her name is Brooksley Born. She is an American attorney, and Brooksley, probably one of the most unheralded individuals. Yeah, can you go full screen on Brooksley, Nick, please? Because she is a very, very important woman that we have not really, nobody really talks about her. Like, who the hell is Brooksley Born? All right, I'm going to tell you why Brooksley Born is important and why all this leads to where we're at today. All right, so Brooksley Born is, the story is that she's an attorney, right? And back in the day, she and Hillary Clinton were friends because, you know, HRC was an attorney as well. And so she invited Brooksley to meet with President-elect Clinton in Little Rock for the position of Attorney General. Well, the story is that the meeting didn't go that well. Bill wasn't impressed. And as history shows, he went with Janet Reno. However, Clinton did send Brooksley Born off to the CFTC. Most of us in crypto, we pretty well know what the CFTC is and what they do. But back in the late 90s, people were like, the CFTC, what's that? I don't know. It's a little known outpost. Basically, you're getting sent off to Nowheresville at the time. So basically, they're like, yeah, Brooksley, that's nice, but we're just going to put you over here and time out. You know, nobody cared about the CFTC then. It was like not even on the radar. So nobody really paid attention. But, and here's my big but. Oh, they should have paid attention to Miss Brooksley Born. See, by the 90s, bankers had a new fun innovation that they came up with called derivatives, which we kind of know about now, right? Well, back then they were new, like, ooh, what is this new derivatives things? And it was a new toy that they could just launder money with or whatever. I don't want to say launder money, but whatever. But see, they were unregulated, okay? Unregulated with no oversight. And it allowed bankers to essentially gamble with customers' money in new ways. And it grew to get this, a $50 trillion $50 trillion unregulated market. And for context, Bitcoin's market cap as of July 29th of last year was what, 454 billion? Billion was it? I have to ask Google. Anyways, way bigger than the Bitcoin market cap, all right? So that just goes to show you, again, an unregulated market for derivatives. Now, being the smart lady that she is, Brooksley saw that there was a very massive problem with these unregulated derivatives. And she and her office back then issued a report in May of 1998 going boom, bang, bam, sounding the alarms like, hey, iceberg dead ahead. This is not safe. This is not good. Well, that didn't go over too well with Larry Summers and all the big bankers. So she got a phone call apparently from Larry Summers, basically saying, hey, you need to stop with this garbage. You are ruining the good thing that we and the bankers have going. And like all the bankers were like, hey, what the fuck? You got to get this Brooksley Born gal out of here. It went so far, as former SEC chairman Arthur Levitt once said, I don't know Brooksley Born. I was told that she was irascible, difficult, stubborn, unreasonable. Like, how do you not know who this woman is if you're on the president's working group for the president's working group for finance, right? Like, you are like one of the big guys. You don't even know who the head of the CFTC is. So again, there was a denounce and deny policy about Brooksley Born there. But still, Allen and the Clinton administration didn't stop there. Allen, Larry Summers, and the crew, get this, lobbied to pass legislation banning regulation on OTC derivatives. Senator Phil Graham of Kentucky went so far as to champion this, and in 2000, Congress passed H.R. 5660, the Commodities and Future Modernization Act, and they were off. Boom. Now, this is where things start picking up momentum. In 2000, it was in the creation, this is a hard word to say, the creation of the securitization food chain. What is the securitization food chain? Is it something I can eat? Are there like pot stickers in this food chain? Because I'm getting kind of hungry. There's a great graphic. Thank you, Nick, of what the securitization food chain looked like and how it was supposed to work, right? I mean, I didn't know what the securitization food chain was in 2000. I mean, in 2000, nobody really cared. We weren't paying attention. We were just lucky that we survived Y2K. We're more focused on Britney Spears, boy bands, and Melrose Place. I mean, back in 2000, like, ooh, what's food securitization chain? Very important. Now lenders would take those loans for homes, cars, education, credit cards, package them all together in what's called a CDO, or collateralized debt obligation, and then they would sell them to investors like you and me, and then that's where they would, make money, right? Well, the AAA rating. Now we're not talking about AAA and the Auto Club. Let's go to Iceland in 2000. They began to deregulate and privatize their banks. And this allowed Iceland to take on more and more debt. And get this, they did so to the tune of $120 billion, three times the GDP of little old Iceland. Now, people were rolling in the cash. It was crazy. Firms, now get this, firms that would audit banks would give them ratings like KPMG said, here, AAA rating for you. And that would allow more money to flood into the system. See, the AAA ratings from the big three, not like the basketball league that Ice Cube does, but the big three of ratings would be like your Standard & Poor's, Moody's, and Fitch, right? Those were like the big three. And if you had a AAA rating, what that meant was they were certified as good as government security, right? And this allowed for many retirement accounts and investment firms to allocate money because such ratings were required for investing. Now, I'm sure most of you watching or are aware of the movie The Big Short. And if you haven't seen The Big Short, you should probably just stop right now and go watch it and then rejoin this later on. Because, that's a very good movie. See, CDOs, they were created left and right. Woo! They were packed into subprime mortgages and they were given AAA ratings, even though they knew these loans would default and go bad. They didn't care. No, everyone's making money. Everyone's buying houses. It was good times. Woo, right? Wrong. No. All right. Investment banks paid the ratings agencies big money, right, for AAA ratings. And the ratings agencies, well, shit, they were happy because, like, yeah, we'll take the cash. Why not? And this is what led to the securitization chain bubble from 2001 to 2007. I think we might have a graphic of that. Maybe Nick can throw that up. But you really look at the chart here, and the subprime funding increased massively. There it is. Thank you. Increased massively in 2004. And then SEC Chairman Christopher Cox at that point basically said, hey, who wants the party? Because he was being pressured by banks like Goldman Sachs, who at the time, CEO Hank Paulson was saying, hey, we want to be allowed to use more leverage. We want to be able to take on more so we could make more money and create more of these CDOs. So, like, get this. The banks were allowed to increase the amount of leverage they used, taking on more and more risks so they could buy more loans to make more CDOs. Do you follow? It's crazy, but it's true, right? All right. Now, we need to talk about a very important woman here. Her name, which some of you probably know, because if you're watching the show, if you're into Bitcoin, you're pretty smart. So you're going to probably know the name Blythe Masters. And Blythe Masters worked for JP Morgan Chase back in the day. Masters joined JP Morgan in 91, widely credited with creating the modern credit default swap, a derivative used to manage credit exposure to underlying reference entities. Basically, what a credit default swap does is it acts as insurance if the CDO, collateralized debt obligation, goes bad. Okay? So these credit default swaps, like CDOs, well, guess what? Those were unregulated as well. I mean, what could possibly go wrong with those? After all, we had Fed Chair Greenspan, 2 Treasury secretaries, and the SEC come out publicly endorsing the banks as experts in dealing with complicated financial services and products. Relax, you freaks. There's nothing to see here. We're worried about. Move along, move along. Well, Goldman Sachs, they were one of the leaders gobbling up these CDOs and credit default swaps, right? They even started to get worried. Get this. They got worried that AIG might not be able to follow through on their end. So guess what? Goldman started buying CDOs against AIG. Like, how bad is that? If you think the people who are going to insure your losses might not be able to insure your losses and you're taking out insurance against that, that's bad. That's very, very bad. And at the time, CDOs were considered a safe investment, right? So again, not safe. Now let's keep going a little bit more. 2008, we kind of know what happened in September of 2008. Lehman Brothers, they're out of cash. They went broke, done, busted. And as history's shown us, that sent massive shockwaves through the entire industry worldwide that, in my opinion, I think we are really still seeing the effects from. And that's kind of what led us to quantitative easing, right? And by 2008, it was Hank Paulson who had lobbied hard on behalf of his bank, Goldman Sachs, back in 2004 for these credit default swaps and CDOs. Now he's the head of the Secretary of Treasury. And when Lehman went bankrupt, it had repercussions globally. Now, the most important thing is what it did was it caused a massive shock to the paper supply. And what that means is that folks who depend on money for payroll, for bills, companies worldwide, they would not be able to make payroll. And that is exactly the same thing that we've been hearing about in this past week with Silvergate and Signature and SVP. Scott Van Pelt's into banking now, isn't he? ESPN. It's in the background over there. Turn off the TV, could you, Mom? Thanks. But that's exactly the same kind of issue that we're talking about. Again, the paper supply. How are these companies going to be able to make payroll? They were not going to. And so, again, history repeating itself. So as a result, folks didn't know who they could trust. Sound familiar? And then on September 15th, 2008, the government stepped in, as history proves, to the tune of a bank bailout, $700 billion. And we're into the land of QE. Money printer's been going burr ever since the global financial crisis. And just continues on here. One thing, though, I would let you know that quantum economics did not get their name from quantitative easing, just to make that clear and on the record. But it was a lack of this distrust, really, that was created by central bankers and academic economists that really, in my opinion, led to the creation of Bitcoin. You know I was going to go there. I just had to get you there and kind of set the table as to why all of this has led us to where we're at. It was Larry Summers, Hank Paulson, Alan Greenspan, Ben Bernanke, Robert Rubin. Heck, both Democrats and Republicans are culpable of this. Okay, it's not just Trump. It's not just the Democrats or the Republicans. It's the left wing and the right wing, both wings on the same bird, and that bird is a buzzard flying around your dead carcass financially, unless you have Bitcoin. So what do we do now, right? For the last 15 years, all we've done is stuck a Band-Aid on the issue. Money printing and debt has continued out of control, obviously. The reforms that were enacted in the wake of the global financial crisis had little or no teeth, and regulators did little to actually protect the average investor like you and me. Hello, Gary Gensler. Knock, knock. Oh, can I? I probably got to keep this PG in Disney, because if I ever want like a full-time gig, I can't be potty mouth Matt. All right. Anyways, all this being said, this is why we need to stack sats. Bitcoin fights hard for you. It's no surprise in my mind that Bitcoin was actually born as a result of the global financial crisis. Regulators and OTC derivative markets, credit default swaps, as well as collateralized debt obligations. So it shouldn't be any surprise when you see guilty parties who got us into disaster. They don't want Bitcoin to succeed. Well, duh. Oh yeah, you want to play the Biden? Yeah, play the Biden clip. Do the Biden clip. Yeah, Nick, hit him with the Biden clip again. I love it.
Okay, you're not going to get COVID if you have these vaccinations.
Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them.
I mean, if that guy doesn't give you enough to go buy Bitcoin right there, I mean, I can't make this stuff up. All right. Crazy. So where are we going? What are we doing with Bitcoin? Well, it's time to stack sats. I mean, things are going to get really interesting here. We've got a 2024 presidential election along with a halving on the way. A recession that's already in effect that a lot of people want to try and deny. And then, of course, a crumbling dollar. And then there's BRICS. A lot of folks here probably know about BRICS. Brazil, Russia, India, China, South Africa, and they're launching a new international currency for settlement. So it's definitely looking more and more like we're seeing some serious efforts, coordinated, circumstantial, etc., that economically, globally, financially, things are shifting away from the use of the dollar and the world reserve currency. And when you lose trust in that form of currency, because whether the government has done something to manifest that mistrust, people start looking at other ways to protect their wealth. And obviously, more and more people are looking at Bitcoin, as the markets are kind of clearly indicating right now. And I think that, you listen to anybody here on the Bitcoin Live family of shows, from Gingerly and 3D, everybody. I mean, we all fundamentally are saying, yeah, Bitcoin is the ark. Right? Remember, it wasn't raining when Noah built the ark, right? They were all thinking Noah was a fudster. Like, they're like, dude, Noah, bro, you live in a freaking desert. Why are you building an ark? What are you thinking? You are gassed up, man. You are a nut. You keep wearing your tinfoil hat, Noah. And then guess what? Noah didn't look like such a freak, did he? Yeah, no, he didn't. There you go. Bitcoin is the arc. Just remember, be smart, be safe, stack sats, and hodl. Self-custody your Bitcoin. That's really kind of the nuts and bolts of it. And so you look at what has gotten to us where we're at now with the banks and Silvergate and Signature and SVP. Again, we're talking about making financial moves that are risky with people's money. And I think the adage that Warren Buffett likes to use is that, when the tide goes out, we see who's been swimming naked. And that's kind of what's happened here, is we're seeing a lot of folks didn't have really anything on. And these high interest rates that were brought about by the Fed, causing a lot of these banks, smaller regional banks, to have to sell and to liquidate. And that's kind of what we saw happen in Q4, I believe, with Silvergate. Again, these interest rates rise, and then, well, we can't make ends meet. I think the analogy that I tried to share with my wife, and maybe I'm on the mark here, is that, if you have an adjustable rate mortgage, let's say you've got a mortgage on your house, and all of a sudden, you're paying $1,000 a month on your mortgage. Well, then the interest rate just goes up about 3, 4, 5%. Guess what? Your payment at $1,000 now has gone up to $3,000 or $5,000. And guess what? You can't make that payment anymore. Well, guess what? Now we're shitting the bed, and we've got some problems. And that is exactly kind of a loose analogy of what's really been happening here. And again, the big pivot from the Fed. I mean, you're going to see a massive pivot, like the kind that you haven't seen since like Kobe Bryant in the lane playing for the Lakers in the NBA title. I mean, we're going to see a massive Fed pivot here. They're in a really, really precarious position with everything that's going on. So I wouldn't be surprised already. You can look at the chart of it's been going around on the Bird app of the Fed's balance sheet. You see this steady decline of steep, and then all of a sudden a massive spike that goes right up in the last month. So the Fed is adding to their balance sheet big time. The question is, what are you adding to your balance sheet? And hopefully it's Bitcoin. So there you go. All right. Did we cover it all? Are we good? I think we covered most of it. I feel good about it. I feel like I'm doing a TED Talk and I'm trying to work through this presentation of the history of the financial deregulations that got us to this point, and why it's so important for us to have Bitcoin and to. Oh yes, well that is the biggest obstacle to Bitcoin adoption right now. Somebody, who was that who tweeted out Bitcoin is the biggest adoption, the biggest hurdle to that. That's funny. I'm just going through the crypto Twitter here. People are texting me here as we're live stream Sunday, Beyond the Block on the Bitcoin Live family of shows. I love it because folks are texting and tweeting me now like, dude, you're crazy. People are calling me out saying I'm high. I'm not high yet. Okay. Give me about a half hour. And no, I'm not drinking today either. I love the live stream that folks are actually DMing me on the Bird app right now today. And I love live stream Sunday because it's just kind of like laid back and kick back, and we just kind of get to talk about oh man. Yes. I love it when the folks troll me too. Thank you for trolling me on the Bird app, man. But some of y'all got to troll harder because, I mean, if you want me to like respond to your troll tweets, you got to bring your A game. You know, we should do something. Troll of the week. Oh my gosh, we should do it. Can we do that? We'll do that next week. Twitter troll of the week. Who's the biggest troll on Twitter? All right. Let's have a little fun. Let's shift gears. Hold on a second. Where's the music? Get the music.
Beer.
Yeah, I want beer too, but that's not what that's not beer time yet. Where's the here it is. There we go. All right. I thought we'd have a little fun live streaming on a Sunday. Let's get executive producer Nick Diamond in here. Nicky Diamond! We're going to play a little game with our good friend, the lovely and talented Nick Diamond, the executive producer. How are you, friend?
I'm good. I'm enjoying myself.
Thank you again for all the hard work that you and the team do behind the scenes, not only with Beyond the Block, but you got Gingerly and 3D Changes Perspectives. You got the Bitcoin Live interviews, and of course, our good friend, Paul McNeil, Bitcoin is Freedom and Bitcoin in Politics. So I know you're busy. So thank you.
Yeah. But it's a lot of good shows. Lots of
It
fun.
is. Yeah. A lot of good stuff. I don't know about this show. It's kind of more fluff, but that's okay. We're having fun. It's more like it's funformational. You know?
True.
All right. So we're going to play a little game. Is it a shitcoin? I'm going to give you a name. Could be made up. Could be real. You guess, is it a shitcoin or not? Should be kind of fun. So let's see how it goes. All right.
Let's go.
All right. Beefy Finance. Beefy Finance. Is that a token or not? Beefy Finance.
I think shitcoin.
No, it's actually a real token with a $39 million market cap.
Wow.
Yeah. Beefy Finance. McToken. McToken. Is that a real token?
Probably is.
No, I just made that one up. I just freelanced that one. Mosscoin. Mosscoin. Is that a real project?
That's a real one.
Yeah.
That's the fact, Jack.
Do you have a bag of Mosscoin? No. What does Mosscoin do? Do you know anything about Mosscoin, or did you saw it on CoinMarketCap?
It's like a fan token of Elon Musk, I think.
Oh, well. Hey, Mom, buy some Mosscoin for us. All right. We continue on. Is it a shitcoin? Beyond the Block, live stream Sunday. All right. Here's another one for you. Clowncoin. Clowncoin. Is that a real token or not? Clowncoin.
I think so, yes.
It is. It looks like it is, yeah. It's a BE20 token or BEP20 token. So, yeah, it's on the Binance chain. Clowncoin. Fitting it should be on the Binance network.
Oh, we live in a clown world, right? So you need a clown coin.
You do. It gets you VIP access to Clown World events. All right, how about this one? Credit Coin. Is Credit Coin a real token?
I think not.
Oh, it is. It's a real Credit Coin's a real token. Has a market cap of $83 million.
Wow.
All right. How about Hacker Coin? Is Hacker Coin real?
Yes.
Oh, no, it's not. Sorry, no, HackerCoin is not. HackerCoin is
It
not
should
real.
be. It should be.
It should be. All right, last one, and then we'll finish out strong here. FUDcoin. FUD, FUDcoin. Is that a real coin, a real project or not?
It must be.
That's the fact, Jack.
There is a link on Coinbase. We Googled this earlier. There is a link. I don't know if you can actually buy it or not. It didn't even give a market cap, but apparently Mr. Armstrong and the team over there at Coinbase do have a link to FUDcoin. So there really is a FUDcoin. Well, good job. You actually, know your poop coins.
Was it 3 out of 3 or something?
Yeah, you did. Yeah, you did good.
3 out of 6.
3 out of 6. Yeah. Yeah. You did good. That's not, I mean, some of them it's hard to tell whether they're a shit coin or not.
Because how many are there now? 10,000 or something?
Yeah, I think it's like 10,142. That's the last count. But I'm not counting.
Yeah, those last 42, I don't know.
They all just came out in the last week. I think we've kind of covered everything for our live stream Sunday event. I'm just trying to check. Is there anything else that we need to cover, or did we hit it all?
Well, I think we need some beer.
We do need some beer. Is it time for beer yet?
I think it is.
Beer.
Yes.
Let's roll it.
Let's roll it. Hey, again, thank you so much for joining us here. Beyond the Block live stream Sunday in the Bitcoin Live family of shows. Don't forget Bitcoin Live. You got interviews tomorrow?
Tomorrow, no. Thursday.
Okay.
Bitcoin
Thursday. Oh man, you got oh man, Bitcoin and Politics. Paul McNeil. That is like one of the best shows, man. You spend an hour, you listen to Paul. You're going to get news. You're going to get politics. You're going to get Fire Alpha. And again, set that reminder. That's 11 a.m. on the Pacific, like 1 Central, and whatever it is where you are in Amsterdam, I don't know, like midnight.
8 p.m.
8 p.m. Central European time. All right. Again, thank you so much for joining us here on the Bitcoin Live family of shows. Nikki, take us out and roll the outro. Well, so much for his beer. Again, I think you've earned one for yourself, Nick. So crack yourself a cold one, and we will see you here Thursday on the Bitcoin Live family of shows with the crypto curator Paul McNeil. Until then, be smart, be safe, stack sats, hodl, self custody of that Bitcoin. All right, let's close up the show, Nick. Good stuff today.
One parting thought: the best financial advice I can give you is whatever you do not listen to Matty Sack.